Welcome back to FaceTime here on Capital today with me, Raj Aria. My guest, just to recap, is Mr. Ming, founder and managing director of Whitman Independent Advisors, Sdn Bhd. Well, just now, we were talking about it from a macro level, all the difficulties faced, especially here among Malaysians. Now, as we talked, many high-level professionals are also facing financial literacy problems. Now, what can be done, tangible steps which they can look at in terms of addressing this shortcoming right now?
I think first thing is to acknowledge the fact that the environment will continue to be more and more challenging. I think as it is, I think many people are saying 2014 will be the years of everything increase. So everything, all the expenses increase, but income increase or not, that one don't know. So for that matter, and I will assure you, it will not happen only in 2014. It may actually happen in the 2015, 2016, and it can become more and more challenging. So the idea is for one to acknowledge that and start to actually think about what can I do with my personal finance. Because I think you could example that you could be earning 50,000, but if you can't save, you spend actually 55,000. No, you are worse off than someone who earn 10,000 but can save 6,000. No, so I think the idea is not about how much you make, but it's about how do you actually organize whatever limited finance that you have, do a budgeting from there, and then force yourself to save and learn how to invest and grow your money. Now,
with regards to saving, a lot of people have this policy whereby I spend whatever my income, I spend, whatever balance or leftover, that's the money I save. Actually, that shouldn't be the way, right?
That used to be the way for our grandfather's generation, because those days there's very little thing to spend. So whatever they make, there's enough for to them to save at the end of the expenses. But I think for here, I also like to quote this word to say that I think living in Klang Valley or here, I think if we don't force ourselves to save, you will actually end up no saving. No, in fact, worse still, you may end up with debt, credit card debt. When I say forced saving, is that rather than waiting for you to spend all the money and then save whatever balance, I would suggest that you set a saving target. For example, now in this January, now it's 2040, you should actually set a saving target, whether it's 12,000 you want to save or whether it's 6,000 you want to save, and every month, put aside the 500 ringgit, 1,000, and then you will make do with whatever balance that you have. So at the end of 1 year, if you don't have credit card debt, which means to say you can survive with that amount of expenses, and you can still have, say, 12,000 saving. Otherwise, I think it will be almost impossible, because I've seen people who earn 10,000 per month, 30,000 per month, 50,000 per month. I think even people who have actually earned 1 million a year, and yet they got no saving. So if you think that you've saved, you make 5,000, hopefully you will have 10,000 income, you can have more saving. I think, please don't think that way. That would be wrong.
So first thing you have to do, you have to acknowledge that you have a problem. Second thing, you need to budget for it. And third thing, once you budget, always make sure you budget your savings first before all your other expenses. All right. So that's the first tip for you. Now, another question for people who are currently in debt. All right, they are negative position right now. What advice would you give them in terms of getting out of this debt trap?
I think in the first place, I think we need to actually consolidate those debts. I think we need to actually also understand the debt that you actually have. I think some people who actually have got debt problem, they try to actually ignore this problem, and hopefully they can actually sweep it under carpet until it explodes. I think the idea is that we need to know what kind of debt that you have, whether it's a credit card debt, whether it's actually housing loan or whether it's personal loan. We need to actually prioritize them. Some people say that I should pay back those at the biggest amount, which is wrong.
The highest interest rate, right?
We should look at the highest interest rate. So look at the highest interest rate, maybe the Along one is the highest.
God forbid Along,
and then next to the next highest will be the credit card.
That's right.
That one maybe 18%. So whatever extra saving that you have, actually you need to actually pay this amount first. Those personal loan, which have got lower interest rate, or maybe mortgage loan, actually you should actually worry that later.
Right, okay. So you have to prioritize. Always focus, if you have debt, is to target the one which has the highest interest rates, which is usually the credit cards. Then after that, moving down personal loans, and probably the last would be your mortgage loans. All right. Now, moving on with regards to this, now we can see that there's a lot of people always like pointing fingers. Whose fault is this? Whose fault is that? But at the end, the buck stops at yourself. You have to take ownership. Now, looking at it from a holistic perspective, now there's also talk that the government is going to implement some form of financial education
Yes.
into the schooling system. Well, do you think it's a good idea?
I think it's a good idea, especially for those people who are actually in the university level, because I think this they are mature enough to understand the finance, and they are also quite close to start earning income.
Right.
So I think if you were to actually educate them during the university years, it'll be just the right time to prepare them when they receive their first income, paycheck, when they receive their first credit card, all the other loan they have, then they are more prepared to make financial decisions.
Right.
I personally think that maybe financial literacy program should not be actually introduced at too young age.
Right.
I still prefer to leave the children who are, say, in secondary school or maybe especially primary school, to leave them out of the money matters. I think at the age, I think it's more important for them to form values based on moral, rather than money and things like that. Otherwise, when they grow up, they will talk money with the parents.
Right.
And then we have another
Very
set of problem.
calculative, yeah.
Then
Different
we have
social
set of
problem.
So let's say we leave them when they have primary school and secondary school, and when they go to university, then only they are mature enough, then only we educate them intensively. So I think government definitely need to put some effort.
Right.
Because I think so far in our subject that we learn, it's all like chemistry,
That's right.
biology, which may not
Maths,
actually help us
language,
too much on how do we deal with the financial stress that we have when we started working. So I think this is the part whereby government can do some.
Right.
Because
Because our lives, as you mentioned, whatever we do, it all revolves around finance.
Yes.
It all revolves around money as well. So
Yes.
it's very, very important.
Yeah.
All right. Now, this is the big question. We were talking about it in bits and pieces in the previous segment earlier. Money optimization. Now, we
Yeah.
know it's so very important to make money work for you.
Yes.
Now, the question I'm sure all of you would like to know is, how do we go about it? How do we start?
Yeah, I guess I think in the first place, when we talk about money optimization, when we talk about making money work for us, a lot of people just think that, to make money work for me, then I must actually start investing. And invest in the property, invest in the share market, invest in unit trust, and just invest. Some also go to the extreme to invest in the scheme cepat kaya. So
yes.
the end, instead of actually growing the money, they may end up actually losing the money.
Well said.
So I think we need to know that in money optimization, it involves not only investing. Investing is only one out of the 8 areas, out of the 8 areas that we need to pay attention to. Other than actually investing, there are also risk management and insurance, children tertiary education planning, retirement planning, asset protections, estate planning, debt and loan management, and tax planning.
Oh, that's quite a lot, huh?
Yeah,
a lot of people don't realize that.
They don't realize it. Like, in fact, when I do it in seminar, a lot of people say, "Wow!" So I always joke with them to say that, do you want to have only one engine running for your money optimization, or do you want all the 8 engines running at the same time?
Right.
No, because if you to actually understand further, explore further, you'll find that not only investing actually can grow your money. There are other 8 areas can also help you to minimize the risk and also grow your money faster at the end of the day.
Right.
Yeah.
Because I think it's human nature when we always want to focus in how to make money, how to get
Yes.
more money, without realizing there are other components at play as well, which actually can affect your total wealth. Like
Yes.
for example, I think insurance, a lot of people don't take it seriously, but it's very important to have your asset preservation as well
Yes.
in case something bad or something adverse happens.
Say for
right?
example, I mean, if you're down with with illness and then you need to be hospitalized and
Right.
then you don't have the hospitalization or medical plan, then you got to fork out maybe 5,000 or 10,000 for that. So then the saving that you're supposed to actually invest in the share market, then you got to realize it, hopefully at profit,
Hopefully,
So
yeah.
if you're actually at loss, then you got to realize it anyway.
no choice,
you
right?
have to, otherwise you cannot get out of hospital.
Exactly.
So you need to actually discharge yourself from hospital. Plus also say for example like loan management. A lot of people when I check with them, they're not aware about what is their mortgage interest rate.
Right.
Some people bought property about 10 years ago, they never bother.
Yeah.
But guess what? Their mortgage interest rate is BLR plus maybe 2%.
That's right.
But they do not know now the latest mortgage interest rate the bank is offering is like BLR minus
Right.
2.5.
Which they could have refinanced right now and save.
Yes, or even they don't even need to refinance. They could talk to the same bank to say that I
Renegotiate.
know I used to have a mortgage package which is like BR plus 2%. So now I know that it's BR minus 2.5%. So could you just revise my package. So there's no need to do refinancing, which involve the legal fee, S&P, stamp duty, blah, 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 all donate. If you can deal it with the same bank, and the bank acknowledge that, then you can actually reduce the interest rate. And that, over the period of 20 years loan, 25 years loans, that can save you hundreds of thousands.
Yeah.
You know? But then you must not wait for bank to call you.
That's right, because the bank won't call you, definitely.
You know what?
I know.
The bank will only call you to offer you the credit card.
Or they want to chase you for payment. Overdue payment. Okay, another thing is
Yes.
estate planning. Now, will writing, planning just after your demise. Now, a lot of people, especially Asians, pantang, right?
Yes.
A choy,
Yes.
It's like talking about bad, people dying and very morbid. But it's
Yeah.
actually still very, very important, especially you want to take care about your family and your loved ones after your demise, right?
Yes, because I think when we talk about money optimization, we talk about growing our net worth. We're talking about accumulating our assets. No point we accumulate so much asset, but the moment we leave this world, then we leave it all to the government to distribute our asset. Because as you know, when government department come into distributing our asset, there'll be a lot of hassle, a lot of inefficiencies, and that cause a lot of damage to the asset accumulated. So we may leave behind 5 million for our children, but if you don't plan properly for estate planning, you may end up having costs here, a few tens of
That's right.
thousands,
Legal
here,
complications,
100,000 legal fee, then you end up paying a lot of lawyers fees.
That's
no?
right.
So that's why estate planning need to be also very important part of your overall money optimization plan. To make sure that whatever asset you grow can continue to grow with minimum risk, minimum cost. So that's why your net growth will be faster.
Right. Not to forget opportunity costs as well if you don't have estate planning.
True. Say for example, if you let your estate stuck, you let your asset stuck in the estate too long, then nobody can decide on the share.
That's right.
Nobody can decide on the property.
Reallocation.
So whatever opportunity will be missed.
Right.
So, yeah.
Right. One last thing, probably something which affects everyone, tax planning. Now, a lot of
Yes.
people think, my company deducts every month, pay to the income tax department, and that's it. But actually, tax planning, there's also certain things you can do, even though you're an employee, right?
Yes, of course. Because actually government also try to actually offer some tax relief. For example, I think the most common one now is bio-retirement scheme.
That's right.
So government actually offer 3,000 tax relief, okay, for anybody who contribute to PIS scheme. So rather than go and take the 3,000, okay, go and buy share or go buy unit trust, which does not offer you any tax relief, you might as well contribute this 3,000 into a tax relief private retirement scheme fund. So at the same time, you get capital growth, plus also if you have like rather high
your high tax bracket,
then
you
you
can even more
already
savings.
earn.
Yeah.
No, so it's practically a no-brainer.
Yeah.
Plus also there's something like SSPN. It's a saving for the higher education fund. So that government also give 6,000 per taxpayer. So for that matter, that is also a saving. So you got 6,000, your spouse also 6,000, then 3,000 and 3,000. That is total about how many? 18,000.
Just like that. Yeah.
Just like that, So just work a little bit hard, come to year end. So that actually will actually help you to cut down the tax. Whatever saving from the tax is also higher take-home income for you.
Right, okay, fantastic. We have run out of time, but before we end this segment, one last thing. For our viewers, can you just give maybe one piece of advice which they can start doing today in order to improve their financial situation?
Yeah, I know 2014 will be a hard year, will be a challenging year. But during this festive season, whether it's Chinese New Year or whether New Year, take some time to figure out what is your saving plan. No matter how hard the situation is, the living expenses that we have, force yourself to save. Because when you force yourself to save, you fall into the category of saver.
Right.
And when you are in the saver category, you will not be in a debtor position.
That's right. We have to inculcate that habit, start it, no matter how difficult it is, but you have to start somewhere, and you never know. One day, that rainy day might come and you will have an umbrella over your head.
Yes.
Mr. Yap, thank you very much for your time today. It has been so informative. We have learned so much with regards to financial literacy, about managing our finances more effectively. That's right, Mr. Yap Ming Hui, the founder and managing director of Whitman Independence Advisors, Sendirian Berhad. With that, we're going to take another quick commercial break, but when we come back, we'll definitely have more corporate news, business developments, as well as interviews here on Capital Today.